Hello and welcome. Today is probably not the 47th day of this month and the year 1984. I'm going to use that reference because there was a book that most people might be familiar with. As today, the market, we're looking at Bitcoin, price going down, everything down today. Everything's your own risk and your own reward. I'm just looking at the market saying what I think I'm allowed to say on here. After all, year is 1984. Or it's not. Therefore, big down move. Seeing Bitcoin going from about 59 right now at 54,000 and change. And decent sized decline, as we can see on the daily term. Decline of 8.8%, breaking down below the support establishing on November 19th and the 22nd, 23rd, and even 24th of the month, as well, of course, the support on October the 28th. Now that that's the case, any price action coming up in this range of the 55s area up to even 57, 58 is going to be meeting up within the 18 average that's now declining and the area of where we say, previous resistance. Because when I look at it from this perspective here, say we have a little price rally that comes up to here. Well, normally I'd be expecting if it's going to be a decline, that's normal. You come up, you break the support, have a little push, and then you're just going to make a new low and have some sort of downtrend going further. However, if it doesn't do that, and this is just something to look for, if it does happen kind of deal, after having this kind of support, if it does anything in the next little bit and dangles back into this range, and it stays and holds within it or breaks out above the resistance, and then we'd be talking about this breakdown being a failed one. And as you see it breaking higher, I'd be thinking, not only do I think that it's going to go this level, but weak resistance. And when I say weak resistance, it might not be at all, or just does a little bit like this of some sort where it doesn't go down much, basically. And then we just have a big move of, again, making more new all-time highs. And that's on the if case scenario that it, of course, you see it in this little area, this previous range, and price action, of course, just having a little small leg lower from where it had previous support, as that example. On other time frames, like say on the weekly chart, price action correcting within the 18 average, it had this run, like big run in here, and after leaving in October of last year, it went all the way up for months without even really touching or much at all this 18 average, and then it had this dip below back in May, establishing support near 30,000, and for a decent amount of time with micro volatility. But then we had this run July into August, and well, that's bringing us back. We're testing this area of key support. So therefore, the range of this here is big and making a higher low in any retracements from the $30,000 level. And even really from this low in here at 38, even just matching, it would be pretty cool in the sense of a bullish level if it can lift off from there as well. And the 18 average of highs, of course, is rising rather. And the price action on it's like a little over 60,000. So you got to see it pretty much near this area of like 62, change to 63. And if you do on that, I mean, all signs are go, because this thing is, you can just do a little box-ish or so area around like this entire run. Like this has been the price action for this period of time. Sideways consolidation. It's been in it from January, well, basically for this year. And let's finish this off with the monthly chart. And it is still nicely above the 18 average of highs, as it had this big move, of course, like we talked about. And for what was since this down move in May, 1, 2, 3, 4, 5, 4 periods of just hanging in there from the 18 average of highs. And then a breakout attempt in October. It's still just hanging in there for this current month of November, and holding and staying above like a 43, 44,000 any retracement. I mean, you can see from this here, that would be like the key hold level. And this has been in a bull market for quite some time. It's spent extremely a micro amount of time or small amount of time with price action below the 18 average of lows. There has just pretty much been very little of it. If there's the really the 3 times in the last 8 years or so. I'm going to move on to Ontology. Didn't plan on doing any altcoins, and I didn't even plan on doing this. But the last I checked, which is the start of this video, this thing was like up like 4%. Now it's up 7%. So I'm going to see what's going on with this. But hey, nice little breakout on the daily chart. We've had a solid resistance here from like Halloween, November 1st, and the breakout highs to November, or the breakout level at November 5th. There's somewhat of a retest here on November the 9th, and all this consolidation through the 18. On the session earlier and throughout the day today, it did manage to get above in continuation, so now it's at highs not seen against, I guess, against the Bitcoin chart since October the 9th. And on the single hour, just, oh, beautiful failed break. Like I said before, in a failed move here, and how these things can go into play. So here we have all this little support in here, has this little breakdown. Oh, and okay, so where would the resistance be after going from here and having this extra little bit? I mean, this is that little spot here. So if it's a bear market, you'd expect this rally as it's come up is maybe it's bullish, maybe it's not. Did it resist at around 1762 area Satoshi? It did not. Later on, it supported it because it continued to go, microscopically beating its intraday highs, and then again supporting that general area that a bearish level you'd be looking as resistance. Now you'd have to think very bullishly and yada yada. This is going on right now. And just because this thing must be dominating the 1 minute because of, yeah, it just went up here at like just a few minutes ago. So Ontology is doing what it's doing. But again, I didn't plan on talking about altcoins. I mean, I plan on talking about the dollar. I haven't even looked at the chart yet. And really, what this happened on the one? Is this some whatever? On the hourly time frame, yada yada, I don't care. I don't care about dollars too much because they pretty much make them out of thin air. And it is the debt-based economic model is just not a good thing in my opinion. As it is within this, there was resistance here. See how it broke out above. It's supporting this level here, and it's having a move to the upside. But a big reason why Bitcoin has been having its move is because of how the dollar is created. And a big reason for like close to for a decade and a half or almost, I've been talking about that of gold and silver. And we'll start off with gold on the 1 hour time frame, which had been having some down moves earlier on in here, as we can see. But just like all these other markets today, 7 a.m., down it goes. A little bit of a retracement on the daily term. Yada, yada. For the most part, I mean, we've had this big support. A couple of times hit at 17 and a quarter. A lot more support, a little above 17 and a half. And right now it's barely below 1800 US. It managed to get above this level of resistance at 1830. So therefore, what's the failed break move going to be? After all, we had this resistance. So is this going to be the failed breakout? That's down moves. Or are we having a higher low and this move being real? Because we've had, after these lows, had these lows in here. This technically is still higher. So therefore it starts to go up, and then would this selling here that occurred become that of the failed move? To me, when I look at this, it's one way or the other. I see one of them has to work out, and as we move into the next week, maybe there might be some sort of decent push. We'll see. Weekly time frame, extremely neutral, sideways consolidation in here. And it's at the bottom end again of the range. You can call this like more of a descending kind of triangle, but the descending triangle then is just going straightish here. And this breakout point is the summer of 2020. So it's been over a year of this price being in this range between, I will call it like 1700 and 1800-ish or so. So been a lot of 17 something for gold over the last little while, or 1800 and something rather. So 1800 and 70, 50, whatever. Yeah. So 17 or 1800 something for gold has been the price for a year and change. On the monthly term time frame, this high has had time to consolidate, really support, I mean, look, more than anything, this level of 2012 resistance. If it breaks down below this 18 average of lows, then we're looking at, okay, this is the previous key level of resistance, so I mean, that's a big, decent-sized dip down, but 1,300 and decent change is where that would be, and piercing down to 1,300 and lower change. For Fibonacci, the high would be, I'm not going to calculate it, but I'll explain how I would do it. High is 2,089, or a little under 2,100. Divide that number by the low, which looks to be about 1061. Yeah, 1045 actually, 0.4, but 1045. So around 1050. You divide that number, which is pretty much 2. And then you do it to the root of 0.382 as well as 0.618. It would be somewhere around like a 1585, and then again somewhere around 13, right around this level here, 1400 or so, would be the key levels. Getting out above this, it's huge, in the sense that have this low, have this high. There was this correctionary phase, making a higher low to the 1970s breakout. Having weak resistance at previous high. Establishing a new high here, having a correction unable, albeit somewhat close, to come back to where it came from, which would have been between the ranges of 640 to 800 and change. Instead, it came down to like 1,100 or whatever that number was. And in that situation, because I think of this, it's been a good long period of time in here. If you start to see some good momentum going higher, we could have some quick, like we could be talking about having these types of runs or even better. That would be moving forward. And then it's like 3,000, 5,000, 10,000, 20,000 gold type of deal. And I do believe gold is going to probably reach even well above that number. And that silver we'll finish this off with. And at 23, and I've been accumulating silver and gold pretty decently recently, as I do like the physical holding of an asset classes. Bitcoin, like I use this analogy all the time. What do you put in a safe? Any type of cryptocurrencies, precious metals, or fiat currencies. I mean, fiat currencies can pretty much go to nothing, lose decent value over a 5-10 year period. Storing your value in wealth there, I don't think is a good idea. I mean, always got to have some for purchasing, but how much do you need? And then you got, again, cryptocurrencies. Maybe you can put some private keys, 12 words, 20 words, or a USB disk with private keys on a file kind of deal. And they'll still be there when you open up the safe in 5, 10, 20 years or whatnot. But in 5, 10 years, I mean, cryptocurrencies could be up 20, 30, 40 times in value, and maybe they don't have any value. But precious metals, gold and silver, are going to still have value. To myself, I say it's guaranteed. I believe in here, within this silver chart, look at this whole long-term time frame, hit the high, higher low, just like it did with gold. Of course, this one did a matching high to previous high. And technically speaking, even though this one looks like it's a little bit higher, it was actually a little bit lower and microscopically. And then this is a higher low to this. So now we're in a situation you break out. It's either going to be, it could stay range bound, of course, from a 14 to 50 range to 50, whatever. But breaking out does give you the bullish situation, getting above the resistance. That's when things can go so crazy. Again, it was crazy in here. When you look at it just back in the day, here we have it in like 1977 or so. Price is like just $5. 1979, the price opens at like $6.13, and then a little over a year later, it goes from $6.13 to $50. So it goes up to like eight times in less than a year. And doing 8 times on 23 would be very close to 200. So if you ever see a situation where next year at this time, if I'm making these videos to, oh yeah, by the way, silver price today is 185, yada yada, that could be possible. But that's It's got how long it takes, and if it does, if it does, to me, it is an if, because not an if. It's a matter of when. Knowing how the dollar is created in all countries is all the same. And even before, I was even thinking. I remember doing research near half a decade ago about the silver inventory that pretty much around the world, that they have, and makes basically how the much amount of silver that we mine per year versus the amount that is used, amount that we mine for to be used anyway, that we always, the world that is, when I say we or they, take more than what's available. And I remember, okay, so early in this decade, like around 2022, 23, this thing's going to get pretty crazy. So I don't know if we're going to have anything like that happen, but from my research, the world uses more silver than is being created, at least for industrial purposes. And in a situation like that, then okay, then we have a major demand for such. Of course, price is going up, and there's going to be a lot of those miners, or no, smelters rather, who melt your silver coins and bars down. Will be a high demand business because people with the bullion are going to, there's not everyone, but a good amount are going to be selling it for that purpose. And those, of course, with those prices being higher, 200, 300, 500, 1,000, 2,000, 5,000 even. I do believe silver's going to 5 digits, not just 4, but 5. And even some people think the 4 is crazy. It's funny when I hear people talking about, oh my goodness, could you imagine silver going to like $80, $90? That'd be like so out of reach, crazy. And when I hear that, I'm like, okay, this should go monthly chart. Crazy. Well, technically speaking, you figure, I look at it as an, okay, this thing was a well overblown top that was well overvalued at the time. So yes, probably should have came back in here, then corrected a bit, and then maybe sometime in the start of the 90s, go back to 50, break the resistance in that decade. We go to like 150, 200, and then maybe in 2001 to go back down to 800 or whatever. I mean, that probably should have been the way, especially when you look at other markets, like everything, how it looked in the 70s, 60s, 70s, 80s, 90s, like the Dow Jones and all the stock markets. Obviously, any other commodity and stuff like that. How many markets are below the highs they hit during the 70s or 80s? Just saying. Thank you for tuning in and have yourself a great day. Bye-bye.